According to a recent report, a tax on housing could reduce inequality and effectively cool the housing market. It's no surprise that buying a home in Canada's largest metropolitan areas like Toronto and Vancouver is not an accessible option these days. And it's only getting harder and harder to buy a home in the greater Toronto area or the greater Vancouver area. As prices keep climbing higher and higher, this is spreading into areas that were previously considered affordable. How likely is it that we'll actually see this proposed tax on housing come into play? 2021 saw the market reach new all-time highs, with a record level of sales and prices topping that of the previous all-time record. The Toronto Real Estate Board reported over 121,000 homes that were sold across the region in just 2021. That's 8% higher than the previous all-time record that was set back in 2016. Those sales have increased. The problem is that new listings just have not kept up, and that's why we're seeing supply issues across most of the country, and it's not just limited to the GTA or the GVA. You might be wondering who's actually buying these homes that on average cost more than $1 million. Due to the rock bottom rates, we're seeing growth in many sectors of the economy that's supported by job creation, and especially in positions that are supporting above average earnings. A lot of the purchasing activity that we're actually seeing today is being carried on by investors who are adding to their existing real estate portfolio, or buyers who are upgrading to newer and bigger homes using their existing skyrocketed home equity. The price of Canadian homes has increased faster than those of any other member of the OECD. Rising interest rates is now a real threat to bring this housing market crashing down, potentially wiping out millions of dollars of equity in the process. As recently as 10 years ago, property speculators were a minority among Ontario home buyers. According to a recent report, between January and August of 2021, investors accounted for a quarter of all home purchases within Ontario. And these speculative investments are, of course, driving up prices. This is also creating major problems for the economy because the rising cost of housing has forced individuals to take on more and more private debt. And while interest rates have remained low, this debt has been sustainable, but only by a thread. And that's why it's such a major risk with rising interest rates. The possibility of hikes threatens to bring Canada's housing market crashing down. This is a disaster just waiting to happen. So then why is there a talk of a new tax on housing being tossed around if the housing market is already at risk? We'll get to that in a little bit. In the last 20 years, Canada's housing market has gone up 400%. And when you take a look at just Toronto and Vancouver, they alone have gone up over 500%. This rise by far outstrips any other developed market in the world. In recent years, an incredible amount of divide has opened up between house prices and real income. And many experts have said numerous times that housing prices are so far disconnected from the fundamentals. They're so far disconnected from reality. As you would expect, the rise in housing prices has also led to a rise in homelessness. In major cities, local authorities, instead of working towards a meaningful solution, they've just taken the problem and sort of swept it under the rug. Toronto has seen a major increase in homeless camps, often set up in public parks. At the start of the 1990s, Canada's government slashed funding for social housing and opened the housing market up to complete domination by private interest. If you don't already own a home and you can comfortably afford rising mortgage rates, this situation is not going to get better anytime soon. By the way, if you're new to the channel or you've seen my content before, do me a huge favor, hit that like, subscribe, or thanks button because it lets me know to produce more content like this and you don't miss out on future housing updates. This brings us to our next topic, the tax on housing. An annual surtax on homes valued more than $1 million could potentially reduce inequality and cool the housing market based on its recent study. It's part of a suite of recommendations meant to shift our cultural view of housing from an investment to housing as a place to live. You can think of this tax on housing similar to that of the carbon tax, which is meant to curb carbon emissions and tackle climate change. The concept of this housing tax is very similar. The report outlines a progressive surtax, starting at 0.2%, peaking at 1% on homes valued at more than $1 million. It will be applied annually, and it will be due when the property ultimately sells. Unlike a capital gains tax that would apply to all homes, this would only apply to the top 10% of the most expensive homes in Canada. And that's because most of the $1 million homes that we see are either located in Toronto or Vancouver or their surrounding areas. Recently, the BC Assessment Authority released data showing that most of the homes across the province are up 50% in value. And the concept behind this tax is to help younger Canadians, future generations, and newcomers of any age. As of right now, the system is set to benefit current homeowners and existing investors who've already seen the value of their homes skyrocket. You might be thinking, well, what about property taxes and the more recently announced speculation tax on housing? Aren't they supposed to control the housing market in the first place? They haven't worked. Property taxes are based on mill rates only go so far, and other measures such as speculation taxes haven't been around long enough to see the impact on housing. And housing inequality in general is a problem across most of the country, but it's most severe in Ontario and BC. By implementing this housing tax, not only is it meant to cool the housing market, but also raise new levels of revenue for the government. Let's take a look in details on exactly how this tax breaks down. It's estimated that roughly 9% of the homes in Canada would actually be impacted by this tax. In the first bracket, the homes valued between $1 million and $1.5 million will be taxed at 0.2%, which would impact 850,000 homes in Canada. Let's say your home is valued at $1.2 million. You won't be taxed on the entire value of $1.2 million. You'll only be taxed on the excess above $1 million. That means in this case, your tax base will be $200,000 in this example. And at 0.002%, if you do the math, your annual tax will be $400. Now, you won't actually have to pay that tax in that year. It will only be due when you ultimately sell your property. So it's a deferred tax system. The government can then use this revenue collected from this tax to benefit, for example, renters by providing them with a portable housing benefit. Now, this tax that I'm talking about is only a proposal. Under existing tax law, home sales are exempt from capital gains tax as long as the home is the seller's principal residence. To date, Canada's government has expressed no interest in creating an additional tax on primary residences. The report we've been talking about throughout this video also outlines other recommendations as well, such as asking Stats Canada to report on the influence of monetary policy on the growing gap between housing prices and real incomes. It also recommends the purchasing of low-density housing units to be converted into permanent, affordable rental units, as well as the creation of a new savings bond to encourage investors to invest in affordable housing. Everyone in Canada deserves a place to call home, and we recognize that affordable home ownership in Canada has become out of reach for far too many households. I honestly don't know if this type of tax on housing will actually make a difference at all. It may just hold back buyers from selling their homes because they know that there is a new tax waiting for them when they sell their home. And that would just restrict further housing supply, which is what we don't want. Or it could force the buyers to pay this tax on behalf of the sellers through a reimbursement process, and this cost could just be built into the housing price in the first place. The struggle for housing requires a massive expansion of public housing, and we have to shift our minds back to housing as a place to live first and foremost. As investors have taken over the housing market, it's estimated that 1.3 million homes in Canada are sitting empty from investors. Just in Toronto alone, it's estimated that 65,000 condo units are sitting empty, serving no other purpose than just speculative investing. Canada's housing market is sickening and grossly distorted. An RBC report found that housing affordability in Canada is the worst it has ever been in the last 31 years. If a pandemic-induced recession is not enough to slow down housing prices, then we can no longer ignore the fact that our housing system has forced housing values to grow far out of reach for local earners. After a chaotic 18 months where Canadians pushed up home prices in a quest to ride out the pandemic, another influx of buyers is set to provide more fuel to the already overheated real estate market. The federal government has increased its annual immigration targets to the highest levels on record, creating the conditions for a surge of new permanent residences that Canada needs in order to fill job vacancies and fund our tax system. This level of immigration will add to Canada's growing population and immediately boost the need for more housing in job centers and their growing regions. This will just ramp up competition for new homes at a point where national home prices have jumped up 40% in just 2 years alone. Canada's strong population growth is another major factor that's driving up our housing prices faster than any other developed country. I personally don't have a problem with immigration, being an immigrant myself, where my family immigrated to Canada over 20 years ago. But there has to be a balance for everything. There needs to be a way to increase housing supply to accommodate new immigrants, because they're just going to struggle just like the rest of us. Meanwhile, countries with shrinking populations have experienced stagnant or falling home prices. Japan's population declined by an average of 0.2% each year between 2010 and 2020. Meanwhile, their home prices on average rose by only 0.2% per year. Another reason why immigration may be pushing up Canada's home prices is because Canada's immigration policies favor those newcomers with pre-existing wealth or with in-demand job skills. Many new permanent residents arrive with already hefty bank accounts or with the professional expertise required to make money real quickly. And like anyone else with means, the first thing they do is buy real estate. If you're an economic immigrant with no other opportunities, real estate becomes one of the most lucrative opportunities and the fastest ways to build wealth. Other factors that have contributed to the rising home prices in Canada include rock-bottom mortgage rates, a flood of domestic investors looking for high investment returns, and millennials increasingly forming families and seeking properties. Wealthy buyers, whether local or foreign, continuously beat out the average Canadian when it comes to bidding on homes. Right now, we're seeing a rush of buyers trying to beat two major forces in 2022. One, are rising mortgage rates, and two, competition from wealthy immigrants. Any measure that increases the housing supply, that intensifies the use of land, that builds more housing, and that frees up more housing on the same amount of land is a good thing. This new tax on housing that we've been talking about, I don't think really helps the supply side of the equation. All we keep seeing is new policies geared towards forcing the demand side of the issue. To me, it's crystal clear. The focus needs to be on addressing the housing supply issue, not the demand side. And when it comes to rising rates, the big six banks are already predicting that the Bank of Canada will raise overnight lending rates by at least 1% by the end of 2022. Only time will tell what kind of impact this actually has on the housing market. But given the current low levels of supply and the extreme high levels of demand, a 1% rise in rates may not be a significant factor at all. Thank you so much for watching. Make sure to check out the links in the description to support this video and future content. Hit that like button, hit that subscribe button, hit that thanks button, and I'll talk to you in the comments section.